Happy New Year 2026. The new season of the podcast will start on January 16 with our Q&A season. There's still time to leave me email or voicemail with any questions if you are a bookkeeper or a business owner who is working with one. And feel free to leave me voicemail, fan mail, or email at any time for any reason. Happy tax season.
Paul Rosenblum is a bookkeeper, not an accountant or a CPA. Although the information in this podcast comes from professionals, it's meant to give you enough knowledge about these subjects to have a meaningful dialogue with your tax preparer about bookkeeping and taxes.
Happy 2026. Happy tax season to all bookkeepers, EAs, accountants, and CPAs out there. 14 long weeks of extra hard work, stress management, and trying to get enough sleep. However, if you follow this podcast, my tax season is expected to be somewhat less stressful, less abuse from clients, and more even-tempered than ever before since I started doing this. I have walked away from clients, and a few have walked away from me because I've set up situations that I knew they wouldn't like. After a tough year personally in 2025, I'd like to think of this upcoming year of one of transition personally and continuing to cut down to a reasonable workload. Welcome to your season, the season of Q&A, your Q's and hopefully my A's. There are always tax changes at the beginning of every year, state and federal. So let's start with the federal ones. I'm Paul Rosenblum. The first question is from Jenny. The stage is yours.
Hi, Paul. This is Jenny in Houston, Texas, and I was hoping that somebody could let me know what the major changes are with the IRS. I know that there's something to do with meals that's a really big deal, but I'm a little unclear on it. And I know there's just got to be so many more changes, and I'm having a hard time finding a really clean, easy place to see that. So if you wouldn't mind just kind of laying out what you think is the most significant changes for bookkeepers for small businesses, I would really appreciate it. Thank you.
Thanks for the question, Jenny. If I were to go through everything, it would probably take me 3 hours. However, I will give you a short list, some of which we have spoken about in earlier episodes, but we'll spend the majority of time on the meal category. In short, here are the major tax changes for small businesses. Number 1, the 20% QBI, or Qualified Business Income Deduction, which has been in existence for a while, is now permanent. This is a pass-through entity deduction for sole proprietorships, partnerships, and S-corporation filings. Number 2, bonus depreciation and Section 179 is now permanent for qualifying assets purchased. Number 3, R&D, or research and development costs, can now be expensed in the year that they were incurred rather than an earlier ruling to amortize them over 5 years. Number 4, 1099 thresholds have changed from $600 to $2,000 starting January 1st, 2026, not for 2025. $20,000 or 200 transactions for third-party networks such as PayPal and Venmo. Number 5, the employer-provided child care credit expands to 50% deductions in most cases up to $600,000. Number 6, the tax credit to employers who provide paid family and medical leave, also known as PFML, is now permanent. Number 7, 401k employer-sponsored. Limits have gone up starting January 1st, 2026, allowing people to save more for their retirement for the future. And number 8, the SALT, or the state and local tax deduction, goes from $10,000 in 2025 to $40,000 in 2026. Taking notes? You might want to listen to all of that over a cup of coffee, or better yet, decaf de-stress tea. There are also state tax changes to look at, although I won't be discussing those here. And I won't be discussing sales taxes either, but check to see if sales tax rates in your state or county or city have changed starting in 2026. If you want episodes dealing more with those subjects, put in your requests now. Okay, Jenny, let's talk about meals. What a complicated major change that started on January 1st of this year. Let me first say that for many years, the IRS hasn't been all that strict with the meal category. Even if a company is audited and they go through the meal category, in my experience, even if the taxpayer doesn't have receipts, and yes, you should always, they will usually disallow a percentage of the meal deduction on the tax return, usually based on the pattern of the receipts that the taxpayer does have. So keep in mind, if the books are showing $30,000 of a meal expense, when the tax preparer enters it into their tax software, it automatically changes it to $15,000 because meals have been 50% deductible, except for a couple of years when COVID first hit the U.S., when meals were 100% deductible. Also, the IRS has not been really strict about the amount of money on the receipt. If a meal that's being deducted was a total of $25, in what I've heard from tax preparers who have represented their clients in an audit, those amounts were accepted as a deduction and not really questioned. Before we specifically speak about the business meals category, I'd like to make this suggestion first. Create a personal meals category in the client's draw account or 2026 distribution account. If the client is a sole proprietor, working in the office and ordering food, that meal is no longer deductible. In other words, no more working meals. If the owner of a business takes an hour and goes to a restaurant for lunch, that's not deductible either. Here are the 2026 rules and conditions that allow you to deduct meals at a 50% rate. Number 1, the expense is ordinary in carrying on the trade or business. Number 2, the taxpayer or an employee is present at the meal. Number 3, the meal is not lavish or extravagant. Wow, is that one open to all sorts of interpretation. Number 4, the meal is directly related to the active conduct of the business. And number 5, it does include business meetings, team lunches, and meals when traveling for business. If the bookkeeper is putting the books together without physically looking at receipts, then all we have to really go on is the total amount spent. So judgment calls or a very close relationship with the client has to be had. If most meals are in restaurants and the general amount is $60 or more, then if I see a fast food meal for $18.50, I'll put that in as a personal non-deductible meal. This will cause a problem with several clients because their profit is bound to go up. So as a bookkeeper, I'd go over the profit and loss as often as humanly possible with them so that they aren't shocked at the end of the year. Your clients have to keep receipts because if audited by the IRS, my feeling is that they will be much stricter in the future. They can look at receipts and see how many main dishes were ordered, what the total price of drinks were, and how many desserts were ordered. No one quite knows how strict they will be, But in 3 or 4 years from now, when they start auditing the meals category, us business owners and your clients don't want to be shocked. One of my favorite categories, refreshments and snacks, during the worst of COVID, were 100% deductible, then changed back to 50% deductible. But starting January 1, 2026, they are not deductible at all. So if a business owner on the way to the office buys coffee, it's now a personal expense. If a company has a break room for employees and has been stocking it with snacks, coffee, and other edible items, none of that is deductible any longer. So even as a sole proprietor, if one orders lunch and eats and works at the same time, it's now considered a personal meal. Jenny and all bookkeepers who are listening to this, I'd send out emails to all of your clients explaining this to them so that they can come up with a strategy that works for them. Another big change in the meals category will be a major situation from one of my clients. There are companies that don't want employees to take a lunch break, so the companies, to keep them at their desks, feed them every day. My client who does this spends between $80 and $100 daily feeding the 4 or 5 employees to keep them at their desks, and the employees haven't minded at all. That benefit, as of January 1, 2026, has gone away. Bye-bye. Zero deduction to feed employees to stay at their desk. One way to handle this is to figure out how much money has been spent per employee lunch to keep them at their desks. Add that money to each paycheck, but don't forget to add the extra taxes as well. And then the employee can order their own lunch and stay at their desk without it affecting their paychecks. It would be a taxable addition to an employee's paycheck, but it would also act as an instant raise, and they would end up breaking even if they bought their own lunch every day. The company would get the deduction of payroll and payroll taxes off on their income taxes for the company. However, there are some meals that still will be 100% deductible. These are, number one, meals provided at company-wide events like holiday parties, summer picnics, events that would include all employees. Number two, meals made available to the general public, including food samples or meals at a charity. And meals are sold to customers in restaurants or catering businesses, obviously. I don't know, Jenny, if you have any clients that pay for a large meal for a group of potential or current customers, but then end up getting reimbursed for that cost later. So, because this is a bookkeeping podcast, let's talk about the bookkeeping procedures of those entries. If you enter those expenses as business meals, they would be 50% deductible. Then, when the reimbursement came in, the entire amount would be added to income or credited back to the business meals expense. It would end up costing the taxpayer 50% more because the tax on the reimbursement would be more than the deduction of the meal. So the best way of dealing with this situation is to separate the reimbursable expenses into another category, possibly using the cost of goods. Cost of goods is always 100% tax deductible. You can also use a reimbursable expenses category for the expenses and then zero it out at the end of the year or monthly after all of those expenses are matched to customer invoices. The client would have to have a line item for each reimbursement so that if audited, the IRS could match the reimbursable expense on the invoice to the client's customer to an expense in the books. In other words, that's where the relationship with the client comes into play as I have been preaching for a few years now. Don't wait until the end of the year to find out from the client that there were $40,000 of reimbursable meals that are entered into the books as business meals. Does the QuickBooks Online software or Xero or any other software tell you any of this information? I think not. This is why businesses will need a bookkeeper for many, many years to come. This is the thinking, human part of bookkeeping. Okay, enough preaching, at least for now. Entertainment has not been deductible for a long time, but meals at an entertainment event are 50% deductible. There are some exceptions to the rule. One would be if you are a management company in the sports industry, then the tickets to basketball, golf, and baseball games could be deductible. Country club memberships are not, but the meals before or after the games are 50% deductible. Did I say that this tax year will be less stressful and easier for me to get through? Am I going crazy? Well, I'll report back on that one. And with all that said, it's the end of my deep dive on the meal category, or shall I say, what's left of it. The other category is travel. Take a look at IRS publication 463. During the worst of COVID, travel expenses, if you had to move for a job, for one example, were deductible. Moving expenses, for the most part, are not deductible now, except for the U.S. Armed Forces on active duty. There are some states that allow moving cost deductions, however. Those are Arkansas, New Jersey, New York, California, Hawaii, Massachusetts, and Pennsylvania. To all you bookkeepers, have a good tax season. Clients and everyone else, work with your bookkeeper and tax preparer this year, not against them. It'll be easier for everyone, including you. And keep the questions coming. I will continue this season as long as possible to answer them all. It's a new year, a new tax season, new situations to deal with, a couple of new clients to get to know, and I'm still looking for my partridge in a pear tree. It's here somewhere. If you are in New York City, stay healthy, as this is the worst flu season in history in terms of hospitalizations. I already took my deep breath that I won't totally let out until mid-April. I'm Paul Rosenblum.